dad used to watch various, financial media shows all day long and read the Wall Street Journal, and he'd talk about stocks, and he was just so passionate about it. And so I was kind of surrounded by this growing up. And as a young person who wanted to do things and wanted to have spending money, I started investing and started getting curious about it. And I thought that, this is going to be the way that I get to go to Colorado on a ski trip or do things. Back then I wasn't thinking about my retirement or doing anything that was, responsible, or I wasn't like ahead of the game. I just wanted to earn money to do fun things as a young person. And so I just thought like, okay, so I can make this money for my part-time job. And then, it's not really going to grow fast enough. So I have to do something else. And so I always had this interest in it. And then I studied finance and economics in school and grad school. So just, that was my background. And I started on one of the banking programs, did one of the rotations and landed on an equity derivative swaps desk where I was working with different ETF issuers and also just hedge funds on their equity, equity finance, like derivatives, exposure types of things.
Sure.
And, so through that, I ended up meeting and joining my first ETF firm. And I spent, over a decade at Direction, which is a levered inverse ETF company. And the founder and chairman of our company now, Defiance, he worked for me when I was there. I was kind of running like capital markets research, sales, and all that. And we worked together for 5 years. We were trying to, grow the firm and educate people about ETFs. And we always talked about doing something together one day. And, he's really the one who took the plunge and started the actual company.
Okay.
And then, I joined him shortly after and as CEO and CIO. And, so here we are, we're about 1.6 billion in assets. We've been around since 2018 and
awesome.
Yeah. And, we're trying to take it to the moon.
Well, yeah, I understand everything's relative. You mentioned Direction.
Yeah.
I wasn't sure even how to pronounce that. So I see it as Direction, and I did read the X had a lot to do with the fact that they wanted to do extra, the leveraged idea.
Yes. Exactly.
And I know a little about their heritage. I'll tell you how I uncovered them. And then obviously we'll spend more time on Defiance. But so I was in high tech for many years. And that dot-com bubble was in like the height of my career. I was making the most money ever, big tech, a Boston-based company, and just everything was going terrific. And I started as an engineer, moved into sales management, business development. And then the dot-com bubble burst. And I was like, well, how can I retire early? I'm just burnt out, this spending another 20 years. So I really studied the markets. And I had been a high-tech guy. I believed that, the NASDAQ was going to go to the moon. And I had to come to that realization that's more likely it's going to 1,500 than 10,000 from 5,000. And I said, what's going to work? And I sort of found commodities in that sector and the cycle. And guess who was doing, by the time I was 3/4 of the way into that cycle, Direction appears with its 2X and its 3X funds. And I was like, yeah, by then I really know how to use that leverage appropriately. So that's a funny story. And then how long did you go? Because I saw them go through, that whole era. And then the next time I went to use the leverage again with like JNUG and Nugget and they were all 2X. They no longer were 3X. And so
I was there for all that. Yeah, I was there for all that. And those were definitely interesting times. So that all happened around COVID, right? Because you had these big market moves. And the biggest thing you worry about with leveraged funds is an outsized move, right? If you had like a 30%, which you think is like, okay, what are the odds of that happening? They're so low. And then lo and behold, during COVID, like there were some pretty gnarly moves in those products, right? And so
unbelievable.
It's also a regulatory thing, like regulators kind of grandfather in Direction Pro shares, but then they pass the derivatives rule, and really the most you can get is 2X in a 1940 active fund. I mean, people find ways around it. They get a little more. You have ETNs that have more juice and things like that, but just as a basic rule of thumb, like you're probably not going to get more than 2x on most of the things you're trying to launch now. So,
What do you,
which
yeah,
is,
what do you think about, like, I don't want to name a bunch of other funds because it's really Defiance time, but there's another company out there that a Brit
yeah,
started. You probably know who I mean and
yep,
they're famous over there because the regulators aren't as strict. They had some 5x. They have a 3x fund on a company that I think you guys are about to launch a fund on,
yeah,
a single stock fund. And
yeah.
I look at the volatility on that 3x in Europe, and that thing
Mhm.
has like 30% a day kind of moves, and it's had one day where it moved 70%. So exciting on one hand, but scary on the other if you're not experienced in utilizing it. So that's
Yeah. And we always like when I work there, I mean, the message and, even the person who started the firm would be the first person to tell you, do not buy our products if you don't know how to use them,
okay.
right? Like they're definitely for day traders, or they're for, I mean, they can be held for longer periods of time, but they're for a trader who's actively managing his account every day and making that
Right.
decision every day. And so, I think that message is kind of out there now. So, and along with a lot of risk disclosures. So
Yeah, I try and, I've had a channel for 3 or 4 months. It's growing fast, but it's young. And I went into the classic high yield space, but I tell my subscribers and I educate them all the time, listen, it's all about selection. Don't
yeah,
just chase yield, right? And that's a good lead in to have you talk to them through me, and I'll make sure that they get all these messages and record. Talk about the difference of how you have your indexes in, JEPI and QQY and
yeah.
IWMY, and you've launched two of the same with a lower target, and just how you find that for different kinds of investors.
Sure. So the kind of like the flagship, we call it our enhanced income suite, right? And so what we're looking to do is return these arguably extreme levels of income to clients through an ETF wrapper. And the way that we do it is we utilize options. So with the flagship products, which are QQQY, JEPI, and IWMY,
Right.
those are returning high multiple month, annualized dividends. Like QQQY is somewhere in the 60% range,
Right.
and JEPI 50s, IWMY like 70s, 80, okay, we'll see how the year ends out, right? But they're
Sure.
they're they're certainly running in that direction. I mean, IWMY had a distribution one month of over 100%, another month it was, 60. So um, what we do in those situations is we sell daily options. So they're called 0 DTE or 1 DTE.
Correct.
It's actually
Yeah.
a made up word that it's kind of a
Right.
made up word. What we do is we sell options that expire within 24 hours and settle to cash.
Right.
And you get that theta decay, you get a high premium basically from selling that option. And so then we gather all those acorns every day. And then at the end of the month, we pay out a distribution. And so who this is good for is the client that, wants that high distribution, but also understands total return. And
Right.
that the best thing to do with that distribution is to reinvest it in the fund. So you're, kind of dollar cost averaging up your exposure to the underlying product itself, the money's working for you, or to take that income and invest it elsewhere into the video, whatever you want,
Sure.
bonds, whatever you want. But
Sure.
the point is, you should be having that money work for you. This isn't like just take the income, because the NAV, the price return will reflect, the NAV falling, right? And total return includes the dividend, obviously. So
I preach that so much, Sylvia, to
the
my
difference is
followers. Total
staggering. Yeah.
return. I mean,
Total
I'll
return. Yeah.
I'll say that to them all the time. They say, Bruce, I want, a 90% return. I said, look, people used to settle for 5, 6, 8.
Right.
I mean,
Yeah.
12 was, I remember in I was doing Canadian oil sands, and I was doing these ones that were 13 and 14%. They were paying out
Yeah.
all their income, and it was fabulous until their prime minister changed the tax laws and didn't allow them to distribute the things. And so obviously then, it was like all of a sudden I had a 30 or 35% NAV loss, and I had only been collecting 14% for 6 months. So
Right.
I
Yeah.
gave out a free spreadsheet to them that even it'll do an annualized if you've only owned something for 4 months, and it figures out the date, what today's date is. And, I preach
It's
that.
great
So,
that you do that, because that's great that
yeah,
you do that. I would say it's the biggest misconception about our funds. It's like people will call and say, I had a call with a guy the other day. He was saying to me like, oh, I'm down like in all of these accounts, like what's going on? And I was like, well, I'm looking at it and I actually see this one up double digits, this one up, high single digits, and this one up double digits. So I don't, and then it's not adding the income back in, right?
right.
And you have to do that. That's what the product
Classic,
is.
classic. Yeah,
Yeah.
it's
And then,
so true.
but the reason we launched the target income funds was kind of like for that reason. It's for the client who,
Wants to
because
pull out every month,
wants to
and
pull out every month. Yeah,
yeah,
exactly. Because we kind of realized like there is a huge cohort of people that absolutely love this product. They think it's built and structured the right way, and others who don't. They view this as we're asking them to portfolio manage, right?
yeah,
And so for them, we came up with the target income funds, and that's SPYT,
right.
QQQT. And what we do there is we shoot for 20% annual, but instead of selling the slightly in the money 0 day to expiry puts, we're using credit spreads, right? So we
And
have
how long are you going out? Are you doing those 2 to 3 weeks or some period that your sub-advisor is choosing? Is that how
yeah.
that's done?
Well, so it's short term on the first leg, and then you open it up with a longer dated call to try to capture
Okay,
more upside on the index. So that could
gotcha.
be, that could be like it's a short term, maybe it's a week or something like that.
Okay.
But the goal is to like, generate the income from the covered call and then uncap it to capture the upside performance. So you'll get a steadier NAV and you can, take that income. It's still better to reinvest the income. It's always better to reinvest the
Yeah,
income.
yeah, of
We
course.
recognize that that's the product for people who want to take the income. So
The only thing I hear, some of my people will tell me, Bruce, I use drip, but I don't like when they buy. They may be with a particular retail brokerage, one time they buy at the
yeah,
wrong time. And I'm like, okay, don't drip that way. Just do it yourself, right?
do it
Just,
yourself. Yeah.
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 But I
I think it's
totally get it.
Yeah, I think it still works out most of the time with drip, though. You're going to win some and lose some,
Yeah.
but
It's
it's so hard to time the market. I mean,
It's
even if you do,
like the
it might
theory
do it.
of buying on ex-dividend. I tell people most of
Yeah,
the time you can win on that, but I've seen
yeah,
days where it opens up in the pre-market with the dividend taken out and it just roars up.
yeah.
So you're not always getting that price. So okay, so thank you for that because
Yep.
I understood it, but I wanted you to tell them about the difference. So the 60, 50, 40, the high yields, they go, oh, well, you got a reverse split and you got this and the NAV is
Yeah,
down. Well, yeah, but on total return, how much did you get in yield and how much did you lose in your NAV? And the result of the difference of the two is your total return. If it's positive, you're making money, right? So I get it.
yeah. Yeah, and they actually have been for the most part. Like if you look at some of the competitive products in this space that use covered call strategies and things like this and compare ours, I think clients who use these alternative income funds would be pretty happy with what they're getting.
Well, and I always I call this a bugaboo with my people. I guess it goes back to when I took options training, 35 years ago. And to me, they use the word and covered call strategy, which is really more appropriate. Like if you take a yield max, just take a single stock fund and you're writing your weeklies and you have your long stock synthetics, then the weekly call is really a naked call because you don't own the underlying. So what I was saying is on that synthetic, when they write that weekly on like a single stock fund, or even when you're long stock and you do
Yeah,
like a weekly, I always say, well, it's really a naked weekly because you don't own the underlying. But since you're mimicking owning it, right, by long stock
yeah,
with the buy, call, sell, put, it's sort of covering that, right? Or trying to create short-term income. So in your higher yield index funds, I assume you're doing the zero, but all you're doing is just selling the calls. You're not really trying to go long because it's an index or how?
yeah. So we don't go long any, so we don't actually hold the underlying. So with
Right.
the income funds, we're just selling options that expire to cash. So they're European index style options and then
Yeah,
cash settled.
I'm
So
familiar.
yeah, and then so you know with the other ones, you know, you're not, you know, you're generating premium from the short term one
Right.
basically. And then you're uncovering the potential for the longer call to essentially, you know, capture the upside. So you're basically selling a call option that's at the money, and then you're buying another call option that's
Okay.
above the index price, if that
S-
makes sense. So it's not a
Yeah,
put act.
by creating the spread, right?
Yeah, exactly.
Essentially. Yeah,
Exactly.
yeah.
Yeah.
I understand both bull and bear spreads, and we'll put
Yeah.
them on at times. I love generally all this options creativity. People will say to me, well, Bruce, you looked at this fund and you said they didn't execute it, or they didn't buy it back, or they didn't do this. And I said, yeah, look, they're not perfect. They're actively managing it, but mistakes happen, or inattention, or they're doing 4 funds at once. I said,
Yeah.
but you're getting the economies of scale. If you've got a single stock fund on MicroStrategy and it's, their split is coming up, they're 10 for 1, right, on August
Yeah.
8th. So are you guys, I don't know if you can talk about it, but are you trying to time your launch after that happens, or does that not really play into
That's
it?
not a factor. That's not a
Okay.
factor.
Okay.
Yeah. We're very excited about MicroStrategy, and yeah, we filed for that product, but yeah, no, there's no timing on that.
Now, are you trying to do both bull and bear? I'm a uranium lover, right? I haven't bought
Yeah.
your URAX yet, URAX, but I like it and I will use it when I see the momentum
Something has
swing
to
back
happen,
in.
right? That's usually
Yeah.
how that's usually, yeah, and we know that, right? Like we know that
Yeah.
one day it's going to be hyperbolic, and that's just how levered inverse ETFs work. Like if you have no news and,
Ah,
geopolitics, like we had a lot of news around uranium a while back, and the fund wasn't out at that time, and of course now it's out and everything's quiet. But that's one of those things. It's a long-term play, I think. It's almost like copper. I feel like those types of
yeah.
trades, and we don't have anything out on that. It's the same
Yeah.
type of thing, right? It's going to be massive in AI. So is uranium. And so,
I love
um,
commodities in general.
yeah,
I really think over this next 8 years, and I just tell my subscribers, look for different things. Indexes are a good way. I love how the S&P 500,
exactly.
how well it's done, because they're always rebalancing. They're always bringing in new stuff. And so with your 3 for 1, you did it on all 3 of the funds. Is that the way
Yes.
you're doing it? And I've I've produced several videos on NVIDIA's, stock split. And then I did one on MicroStrategy, just for the very reason that most people can't figure out. It has no material effect. It's an
No,
accounting maneuver, right? I mean,
yes,
it's just, you
that's it.
you decrease the shares or increase the shares, whether it's a reverse or a forward split, and it's just accounting. But they always seem to,
By the same proportion as the price. Yeah, nothing is going to change. It won't impact the amount of dividend. It won't impact, anything.
right.
That's a great way to put it. It's just an accounting thing. I just wanted to make one quick point because I think so for the quick, for the income options income funds,
Yes.
so we don't own the underlying, but for the target income funds, we do own the underlying. So I just
Oh,
want to
you
make that.
do? Okay. And
Yeah, yeah,
and
yeah. So because you're getting the div, like we own with SPYT, we own SPY, right? And you're getting
okay.
the div there, and then we're selling the covered call credit spreads on that one, and that's how that works. And for Nasdaq, it's we own Qs, right? And so
Okay.
yeah, so you eliminate that risk, and on the first one, you have no risk of being put the stock because it's cash settled. So just
Right.
to make that point, but
I
you're
I
not.
love that, but you know what? I don't know if you've ever talked to, now. I think Jay does and Zega does you guys'
Yeah.
options.
Yes.
I get the sense in the Flex system that I know all about how it works and how institutional players do, but it always seems like they have to either make a phone call or do something just to close out what would
Yes.
normally be a simple, hey, I get that you're not letting it expire worthless because you could get assigned in retail, But in Flex, they have the European, so they never get assigned because they can't, right?
Yes,
They don't want to
exactly.
own the underlying. So
Yeah.
that seems to be a little bugaboo because I'll look at it as a retail guy, even knowing that they're in Flex, and I'll say, well, they paid 4 cents for that, but it was $30 underneath the strike price. Well, that's kind of what they have to do. They electronically have to settle. So
Yeah.
I don't know if you ever even look at any of that or even aware of it because you've subbed it right to other people. So
Yeah, no, we look at the trades. Yeah, we look at the
okay,
trades every day. So
okay.
yeah, we do. Yeah, we see it all, and we can kind of like, from our side. I mean, Jay's obviously the options trading expert,
Oh,
and so I
totally.
would, wouldn't even comment on that. But in terms of just like as an observer and also background and trading in this kind
Sure.
of thing, um, you actually see what's really interesting about this is I think what people would be surprised by is the ability to keep this up. So the amount of kind of like volatility and
Oh,
juice that's out there right now, like particularly last week, and
uh-huh.
there's election this year. I mean, this is a good year for these types of products. It's hard. It was hard around the holidays when there was nothing going on, and
Right.
it's harder to find
Well,
that premium. But
and when,
yeah,
September is going to tell us a lot when the big
yes, yeah,
institutional money comes back. We're just not seeing the volume now. So it's easy to
right.
push the
Everyone's
markets around a little
away.
bit in the summer. Yeah. We
Yeah,
may be sorry.
except for me, we're working. Yeah, yeah.
So what
Yeah.
else? So you've got USOY, and I'm familiar with the USO index and or index, the oil fund. So that's a good area for commodities. Do you know, I'll never forget during COVID being long WTC, being long oil futures, and calling my broker and saying, I'm not really seeing a bid. He said, Bruce, there's no value on it right now to
Yeah.
see. I mean, it literally because of just the implosion in March of
Yeah.
2020. And then, you know what? I ended up getting out of the position in a small loss. And I look later, it just roared back, you know?
I was gonna say at the time that was probably a big win to get out of a
Yeah.
small loss,
Well, it
right? And
was
then
because it was almost, it was
enemy
just,
get into wars and
yeah.
um
So
goes the other way.
what else are you going to do? And when you do a fund
Yeah.
like a 2X, a lever, do
Mhm.
you try to do both sides? Because I notice, I think on the MSTR, aren't you only going to do a short and not a long? Or can you talk
Opposite.
about that?
Yeah, the opposite actually. So we'll start with a long. The goal with these. So it's really interesting, and I have this. I kind of have this experience from working at Direction, and
Sure.
Matt and I have plenty of time. Like for over a decade, I mean, almost 90% of the assets sat in the long funds. There were very few short funds that were taking off, and the ones that were taking off were the ones that had interest from hedge funds to double short both positions. So it
Yeah.
wasn't necessarily, it was so rare that I would talk to someone that used a short fund as a hedge, which is what it's intended for, right? It's a hedge for earnings, it's a hedge for, whatever volatilities in the market, whatever it might be. And really the short funds gathered assets because they were highly arbitraged, right? By
Right.
the algo, the high frequency traders, or B, it was like hedge funds double shorting. And so I think with short funds, the appetite from the retail community has overwhelmingly been for long funds. And I don't know if that's people have
I think it's a
a bias
psychology.
or it's being bullish or what it is. But so with the bear funds, it's kind of like if the market tells us to launch it, it'll come. But I think, we tend to look at long funds. We're
I
always
think you're
thinking about
smart.
short funds,
think
but
it
yeah.
I think it scares the investors. I think because I don't see it
Investors
in,
just don't short. I mean, like retail
yeah,
investors just don't, as a habit, short. And from what I've seen,
correct.
right? Yeah,
And I try and I try and teach when they ask about some ways as using it a lever. I say, look, if you're all loaded up on an income fund and you get capped on the way up and now it's turning on the way down and you're going to get a little bit of income when it's going down, but you might miss some of the up and get
yeah,
most of the downside. And I said, are you playing any 2X? I said, go out and when you're worried about something, buy in the opposite, right? As a hedge. And I think
Yeah.
they're slowly starting to understand it. But I would agree with you. Something else you said in an interview, and I listened, and it struck me as interesting because I didn't see it in the tech.
Uh-oh.
I didn't see it in the tech world. We did just the opposite. It had nothing, tech and trading.
Yeah.
But you said, well, when we launch a fund, we don't want to be third or fourth or fifth because the odds of being
Yeah.
successful is somebody else. Can you talk just a little bit about that? I mean, I know
It's
it's a simple concept, but
right.
maybe,
Yeah, it is a simple concept. And I see your point, right? Like if you look at, I mean, there are 7 of the Mag 7. I know they don't all do the same thing,
yeah,
but you can certainly muddle a lot of what they do as being similar, like the cloud business, for example, or all these
sure.
cybersecurity companies, and they all do well. And so, point taken on that. But in ETFs, there's just this phenomenon that the first mover seems to win.
So the
Uh,
first mover advantage is really like an
It's a
advantage in
thing.
that.
Yeah,
Yeah,
it's a thing. And sometimes there's room for 2 or 3. I mean, like with Bitcoin, I think
yeah.
I think Bitcoin kind of it seems like, well, that's not true. Look what happened to Bitcoin. But I think Bitcoin is so different because a lot of those funds were converted assets that they already had in a trust in a different format. Like whether it's Bitwise or whether it's Grayscale, they were kind of doing their thing. You assume they just hold on to their clients as they
Well,
transition. And
yeah.
when you get a behemoth like BlackRock and you make it cheaper, so in that case, there's room for more. But the
Well,
average ETF out there, specifically levered ETFs, I mean, it's the first mover that is the biggest, and then the second
yeah.
guy sometimes gets a little bit and does well, but it's then you get a
I
third and
see
a
what
fourth.
I can see what you mean. And yeah, because you're selling to retail, whereas sometimes in the business market, if I want to be out and be a cloud server, cloud offering, and I'm a corporate entity selling to other corporations, they're going to
Yeah.
listen to what I have, but retail may associate. But it's funny, I didn't even always know that Direxion was behind Nugget and JNUG and Dust and all
Yeah,
those.
people know the tickers. People
Yeah,
know
that I
tickers.
knew the ticker, but I didn't know the fund. And so I looked up the fund and found out more about them and sort of because I'd also wondered why the 2X, why the 3X and then the 2X. And do you think there'll ever be
Yeah.
any issues with the SEC again and tell me if I'm wrong with this, and some
Yeah.
of the single ticker stocks and the European options and the flex, they're doing that for a reason. Because number one, as I understand it, an ETF can have more than 90% of its income in a single stock.
Yeah.
So in
Yeah.
order to avoid that, you do treasuries for your collateral. You then create a synthetic long in options and you write your naked calls, if you will, on a weekly, monthly, few different funds do it differently. But do you
Yeah.
think they'll ever come back and say, no, we don't, we approved it, but we are going to take it away? Is there any risk to that?
So I can't, I'm always
I
really
know you're
hesitant
not a
about
regulator
what
and
they think, but if you look at what happened with levered inverse ETFs, right? They were
yeah,
out for more than a decade, and for about a decade, there was so much debate and talk about the SEC will take them away, the SEC is going to do something, and it took that long, I think, but in the meantime, good things were happening, and I think that's why it also took so long, right? Because issuers started educating and warning and providing more information to the people that were, at risk for losing something. And I think that they probably did struggle with like, well, what do we do? They're doing all this better. People are more aware, but yet it's still
right.
out there. I imagine that's how they consider some of these things. But I think once it's out, it's hard. You need a really good reason to take it away.
Yeah, that makes a lot of
There's
sense.
yeah, and like look at the things that people trade, future. I mean, there are things that have 10x leverage, right? So 2 seems like
Oh,
nothing.
that
Um,
reminds me.
and
I
options
I
that set up
wanted to show
cash that
you
are
some. Yeah.
covered, like it's
Yeah. Look at
unlikely.
this. I want to share this with you for a second.
Okay.
Look at
I think they
this.
write rules is my answer though. I think they'll write rules if they get uncomfortable about things.
Do you see what I shared?
Yes,
Okay,
yes.
do you know what that is? You
Yes, I
probably,
do. Yes.
okay. So
Yes.
it's the MSTR 3 times compared to
Yeah. Versus
TQQQ.
TQs. Yep.
Yeah.
Yeah.
And I just
Yeah.
look at that and it's like almost like a flat line for the TQ. So people go, oh, the Nasdaq's volatile. No. But I particularly, I mean, I just love MSTR. I can't tell you how much I like that.
We love it too. We love it too.
Yeah.
Um, and I have a question for you actually on that, right?
Sure.
Because you look at
Okay.
stock, right?
Yeah.
Like we're talking about 2x, 3x, one,
Sure.
1.5.
Yeah.
Do you care? Like, do you care? Like if someone has a 2 and someone has a 3 or someone has like
Well,
a
it
one
depends
and a
on,
half.
let's say that yes, to some degree, I do.
Okay.
And if I'm going to go out, because right now I think the bull run's on, let's say
Yeah.
I do.
Yeah.
And
Yeah.
let's say I have 20% of my intended investment in an income fund. I'm in a
Yeah.
Yield Max and a Misty or something like that. And then I say, oh boy, MSTR is going to take off and it's going to be massively capped on the weekly. So I'm
Yeah.
going over to the highest leverage I can get, because the one thing I learned is you don't stay in these leverage funds. It's not a buy
Yeah.
and hold forever. It could be a 2 week, a 4 week, a 6 week. What's the cycle, right? So
Yeah.
that's
Yeah.
how I do it. And the more the merrier to some degree, a 2x, 3x. But I probably wouldn't choose. There's times that I buy a BTC because I'm not getting what I want out of an income fund for it. And I'll
Yeah.
go and I'll buy Pro Shares, or I'll buy one of the other companies, 2x BTC futures.
Yeah.
So that's how I do it.
Yeah. And I guess there's so many options out there too that it's like for crypto.
Yeah, that's your problem, that going into
Yeah.
that area. And I'll tell
There's
you
so
that,
many options, but what I like about MicroStrategy though is that I think, we thought long and hard about filing for this one. I really like the idea that it's a crypto play and that it's also it's an AI company, right? I mean that
I think Michael Saylor, just when I listen to him, he's like, I also like Tom Lee a lot when, you know,
yeah, yeah,
and
same.
and Michael Saylor to me is just so smart. He's literally
So
was a
smart.
rocket scientist, right? And I listened
Yeah.
to him. I was a gold guy for years in commodities. I was Bitcoin. I don't know about that. It's really only been about 2 years that I figured out. But I tend to not be the meme coin and every other crypto in the world. I think Ethereum and Solana are okay. But in general, I'm a Bitcoin guy. And I
Right.
think what he's doing and what he's done with his treasuries, he's talking to one of the old companies I worked for years, with Michael Dell and Dell Technology. I'd love to see him get some of those big major corporations to start just putting a small percentage, right?
Put your money to work a little bit. Yeah.
Yeah. I mean, they tend to be conservative, but I mean, he's shown it. Yeah, I think he's reinventing. I mean, if you listen to him,
And
he
Tesla
lit.
too, right? Tesla, that was a big thing at Tesla where so much of his right
Uh,
balance sheet was in crypto.
yeah, that's another company that is a classic. The income fund can get you killed if you do it wrong, right? It's like, when do you buy in? I mean, Tesla went from under 20 in 2019 to 421 and back to 100. So if you bought it in an income at 350 and it went down to 100, you didn't do very well, right? I mean, you still got income every month, but
Yeah.
I mean, I think that's a $2,000, $3,000 stock, and it's more than a car company. It's AI on wheels, and it's
Right. Like
eh,
MicroStrategy, another smart guy doing, a lot of innovative things that are going to shake out one way or another in
yeah,
time. And I think it's so interesting. I mean, you're the expert on this, you're the tech guy, but
yeah,
I just see like how badly tech was punished this week. Hi.
yeah. Hi, sorry, Sylvia.
No, no worries, no worries, no worries.
Okay.
It happens to me all the time. I live in New
So
York City.
yeah.
Yeah.
So what was your?
I-
But you guys are you in Miami now? Is everybody down there, or do you still stay up in the Northeast?
No, I'm in New York City. We're
Oh,
incorporated in
okay,
Miami. Yeah, we have half of
okay,
our team is in Miami
okay.
and myself and the chairman are in the New York area.
Interesting. So you
Yeah,
were
no, my question for you as a
yeah.
tech guy was like I was really, kind of shocked that the market had the reaction it did to CapEx, right? Like CapEx is this
Uh,
dirty word rough, but
You
and I
know,
thought it was like necessary. CapEx is necessary for growth and innovation, right? So, but I'm curious about your
you
view.
know, the other thing too is I was seeing a rebalancing. You know, I would tell some of my subscribers, and they were younger people working in tech, and I'm going, hey, I think the Mag 7 is seeing all these flows. You're going to get a rebalancing. You're going to get money into the other 493, and then you're going to get
Right.
it in the Russell as a piece of that. And they're like, oh no, it's all AI, it's all the big guys. And I'm like, you don't understand. The financial market sometimes just doesn't care about that. They do and they don't.
Yeah.
So,
Yeah, yeah, no, I agree that probably half of it was the flow, but I think the sentiment though was like AI is a bubble, right? I mean, that's what I heard all day. Like,
well, and
um,
I have a philosophy like I think NVIDIA is going to be around for a while, but to me, it's easier to challenge hardware supremacy than it is
mm,
software because the margins in software are so much greater. So, like you
right.
take a Palantir, you take their
Yeah.
ontology, you take their generative AI, they can
Yeah.
really change companies' workflows. Whereas NVIDIA, you got to have their processor, you got to have everything to make it all go, but it's the software that really, really does the trick. So I see a lot of things there. NVIDIA is going to do good for the next few years, but I think somebody's going to squeeze them on the margins eventually. Even
Yeah.
and FMCI is the same kind of thing, right? They've
Yeah.
got a really creative location in Silicon Valley, and the guy's brother is in Taiwan driving all that. In some ways, there's some semblance to what even NVIDIA is doing. Um,
Yeah.
uh, we shall see. I mean, I think
Let's
that
see.
there's going to be winners, but I don't really see the NASDAQ outperforming as a whole, maybe commodities and other things over the next 6 to 8 years. But I think there'll be some AI type companies, Tesla and some others that'll just Palantir that'll just do phenomenal, and those drag those
Yeah.
indexes up. So, what else can I ask you? Tell me about, and how's our time? We got about 10 minutes. Do you have 10 minutes? Are you okay?
Yeah. Yeah. Sure.
Okay.
Yes.
So you're now doing the indexes. I love that you've got the high yield and you've got the
Yes.
lower yield. And what's your target? Is it 20, 25? What's the number for your,
20. Yeah.
okay,
20 is kind of the sweet spot. I mean, we could target higher, right? But the more aggressive you get, the more the
the
NAV
more
decays.
the NAV, yeah, yeah.
And then, so that's the thing. And then on the other side, so on the other side, we have the leverage funds. And then our bread and butter, our initial kind of foundation is this AI stuff, right? We have a quantum and a 6G ETF. And
Yeah,
so like you were thinking that Palantir is the future and
yeah.
MicroStrategy is the future. And, so that those funds play into that space. And that's kind of how we think about it all.
And even, I mean, there's some interesting plays out there. I love Amazon, but it's like all my old friends that are still working. Most of
Yeah.
them are in Amazon. They're all in AWS and the cloud services, and most of them handle big global, either car companies or tech companies. And it's just fascinating to hear how, in some ways, nothing's changed. In other ways, everything's changed. It's just,
Right. Yeah. There's so
it's,
much under the hood of these companies. I mean, I like randomly, meet people and talk because I talk so much about markets and you meet different people like yourself who are from the
yeah,
tech world. And I met somebody who's an engineer, MIT PhD who deals with all the like shipping and logistics part of Amazon. And if you think in having that conversation with this person, like if you think about the logistics and the difficulty and like the massive level of technology that goes into that brown box that you receive every day. It's just phenomenal what this company does and what that technology can be harnessed to do.
I just had a
So
conversation with my best friend who globally manages one of the car companies, and he was over in Japan having meetings. He lives in Southern California, and he went out to one of the big Amazon ship sites, and they were
mhm,
showcasing some of their robotics and stuff. It's not quite Tesla edge robotics, but it's
right.
amazing what they do,
Yeah.
these sort centers and just how they handle all that stuff. I thought it was a big deal at FedEx back in the 80s when, you know,
Yeah.
you would send something from Southern California to Northern California and it would go through Memphis. You know, it was all
Right.
about, you know, sorting and processing. Well, now it's all about
Logistics.
robotics, and wait till the drone is delivering it, right? And the
Right, right.
Tesla, you know,
Dropping it on
robo
your,
car. Yeah,
yeah.
it's all coming, Sylvia. So do you get
I
to
know.
do anything fun as far as the CIO role? I mean, is that limited
Yeah.
for you guys? Um,
Well, you know, it's limited in some ways, right? We kind of can't be advisors, right? In terms of
right.
like direct portfolio advice and
Yeah.
things like that. But I mean, I love what I do. I love our company. You know, the coolest thing ever about, you know, being a partner in a company that's a startup is that everything that, you know, all of your efforts and ideas, you know, can come to fruition. You can kind of do things that you think are missing in the market. You can improve things that you think could use tweaking, come up with some great ideas. I mean, it's a lot of fun, but also it's a lot of stress, right? We have
Oh,
investors,
yeah.
we have people holding our ETFs. We want to do right by people. It's terrible when it's COVID and your fund is down, and it's
Is
great
it,
this year. You're an
is it,
AI, and
yeah.
you know.
Has it changed a lot? I mean, I know from the old mutual fund, but when I look now and you know, I remember I was covering the OMAX and people were Jay this and Jay that, and I said, well, wait a minute, Jay's the co-CEO of Zega. Zega's a sub-advisor, but how come some of the funds have a front face of the actual fund, like you guys at
Yeah.
Defiance, and then other funds sort of set behind title or I mean, everybody's using different people to do something, you know. Um,
It's just the structure. So if you're a huge company like a BlackRock or, you know, whomever, right? ProShares Direction, they have their own.
you don't need all the
They don't need a
little,
white label. They don't need anything like that. They have their own trust. They have
I see.
custodians and, you know, they run their own company. They have their own board. But when you're a smaller company like ours, you know, one of the biggest expenses would be to, you know, start our own trading desk and create our own
Gotcha.
trust and things like that. So sometimes it's more efficient to use the expertise of, you know, and title's great and US Bank is great. I mean, they offer these services and you get guys like Jay to sub-advise. You know, we have
Yeah.
other sub as well. Pensera is one of our sub-advisors.
I
They're
noticed
awesome.
them on the
Got the
name.
best traders on the street.
What do they do? I didn't know what they did.
Yeah, they're basically we outsource our trading to Pensera.
Oh,
So
okay.
they're like out similar thing, right? To I mean, Title does like the whole white label thing and trust things, but
Right.
Pensera is
Right.
kind of like the outsourced PM. So there are traders, there are trading desk
And
and
then you have who's it? Fund side fire. Who does the
oh,
distribution?
Foreside, yeah, and
Yeah,
they work
four
with
side.
everyone. So you have to have a distributor when you launch funds, right? Mutual funds,
Okay.
ETFs, whatnot. So Foreside tends to be the distributor for you know, most of the ETF issuers out there. I mean, there are a couple others. There's like Alps is one of them.
And then I noticed that
But
some do that. Like I think I interviewed the CEO of Curve, much smaller, right? Little six fund company, Howard Chan. And he's down in Miami, but he's sort of a
oh yeah.
PIMCO fixed income guy, great guy. And I was
Mhm.
talking to him, and then I asked him, well, who does your options management? Because they have six of the Mag 7 companies, and they have a conservative, they hold their NAV pretty well, but they don't have that high yield. And he said,
Mhm.
oh, we use Neos. And then I looked them up, and they sort of
Yeah, they're
have,
another title. Yeah, they're their competitor of
yeah.
yeah.
But
And
they
then there's
also
investment.
do their own as well as, so that's kind of interesting that
Yes.
some are I guess I call them a hybrid. Some do their, oh, bless you. Some
Thanks.
do their own funds and do sub work for other people. So there's nothing that says you can't
Yeah.
really do that. Okay.
So fun fact about us, we have a marketing company. So we're Defiance Holdings and we're Defiance Holdings owns Defiance ETFs and Defiance Analytics. So Defiance
Okay.
Analytics is our SaaS, we're the most aggressive digital marketing company out there. We started off by doing our own marketing, like, you know, startup,
Nice.
no fun salespeople, and we started picking up clients. So we have other clients as well. Like we've worked with Crane Shares, SoFi, Allianz. We work with Will at Granite Shares. Like we have some of the best premier ETF companies for
Oh,
clients,
nice.
and we do all their digital marketing. So, we do a little bit of that as well. And we participate also in doing distribution and things like that. So
Did
that's
you
been
guys,
actually,
did you
yeah.
learn that from your time at Direxion? You
Oh,
and
no, well, yes and no, right? You obviously have this experience with like internal marketing departments and things
right,
like this. And when you're a startup, you can't afford that, right? You can't
sure.
afford a big sales team, you can't afford a big marketing team. And also, our chief marketing officer is just like this, super brilliant thought leader. He, Matt, our chairman, tasked him with like, you got to figure out a way to do digital marketing because we have no money and we need to compete in this massive
That's
world.
great.
Yeah, and Jacob just went out there and like built these algos, built this platform, figured out how to, win with ads, figured out how to win with distributing, email campaigns, everything from like websites to digital distributions to ad targeting, all this stuff. And it was actually Crane Shares, Kevin
Uh-huh.
O'Leary,
Yeah.
who kind of noticed us and noticed that like, hey, who are these little guys that are all over the place? And they really gave us an awesome opportunity to do some of the marketing with them too. And so yeah, it's really full credit to Jacob and his team. I mean, they just masterminded the best digital marketing platform,
Yeah,
and
I interacted
oh,
with
it exists.
Jacob and with Travis over there and setting
Yeah.
this up. So
Right. And so that's a service that they do as well, right? Because now so much of the information out there comes from people like yourself, right?
yeah.
The retail community trusts you. They think they get better information, more real and personal information. And so they're following influencers, they're following, just educators and people who have their own channels and things like this. And it's just been such a massive educational opportunity, I think, for investors. And it's
Yeah.
also been for companies because now we get to interact with you guys too.
Yeah.
So yeah, so Jacob figured that out. I don't know how many ETF companies are doing this, but I imagine most will be soon if they're not.
Well, there's just a plethora of growing. Every time I look up something, I
Yeah.
was trying to build a list. I did a couple things on yield boost coming from Granite shares, and I compared it to Yield Max, and then I had interviewed Howard, so I included Curve, and then I'm going, well, I better put some Defiance, and then I literally just got so tired because it just goes on and on and on with some of the I mean, they take different
Yeah.
strategies, right?
Yeah. Yeah.
Now,
Yeah.
I assume, like on your racks, you're basing that on URA as the underlying. And I love URM. Like I said, I typically own URA and URNM, and I'll write covered calls or I'll write strategies on, I'll sell puts if I think they're undervalued to get assigned, or I'll keep the premium. So I have a lot of strategies, but
Mhm.
that does pay do you then, now, you don't own the underlying, or you do you
Yeah.
rights?
Right. Yeah. I mean, so we use swap to get the 2x exposure, but yeah, I mean, we're going to be holding uranium, and yes, it's true. You're going to get, the multiple
Yeah.
of the dividend as well.
And
So
I
yeah.
find that they don't. There seems to be something in there that, they do. Eurex does twice a year. They typically pay
Yes.
in July, and then at the end of the year, paying in
Yep.
January sometime. And the end of the year one always has a lot more. And these uranium, some of them are startups and they don't really pay much. Some of the bigger ones do. Uh, but that's kind of fun. I love that. Let me see. What else did I have to ask you? So yeah, I get the Bitcoin. It's saturated, although I love it. I think MicroStrategy, you guys are going to love that when you have
Yeah.
that offering.
Hope so too.
And then you've launched, or you're launching Ethereum, I have in my notes. Is that something you're already doing now? Or is that okay? Um,
Yeah.
and how will you use the underlying in that? Is that knowledge? I mean, can you talk about it, or is it something you can't talk about at this point?
Um, yeah. So I mean, usually what we do is like you have some percentage of the underlying, and then you use
Options
swaps.
or
Yeah, swaps to get
Swaps.
exposed.
Yeah, yeah.
Exactly. Yeah, yeah. So it'll be, yeah, like we will definitely hold the underlying, and then you'll have swaps for the rest of the
Well,
exposure.
ask Jay this one. This is a classic because I tell my people all the time on the channel. I said, listen, and I heard this from Jay. They in Yield they have a fund called YBIT. And it's the
Yeah,
first time I've seen a
I know it.
derivative
Yeah.
on it. You know the story, right?
Yes.
So
Yeah,
YBIT
yeah.
sits on BITO. Well, BITO had a very small dividend for a while, right? I've owned it for a year or so. And then all of a sudden they started paying a lot out. And now you have this where they have to plan their options around the dividend calendar of BITO when they're writing them for YBIT and all that. So it's really hard. And then people say, well, it's not keeping up. Its NAV is going down. And I go, what's your total return? They're yielding over 80% in YBIT, right? So the classic education. So just, I've never seen one where, and I think that even caught Zega by surprise because they knew it paid a dividend, but the dividend was very dinky. I don't really know why that changed. I don't know that it was purely in their earnings or they just chose. So we'll have to
Yeah,
see
not
on that.
sure. Yeah.
All right. Well, Sylvia, thank you so much. Let me see if there's,
Thank
I
you.
think that covers me. Let me know if you have any other questions. Can you think of anything else?
No,
And-
it's great. Great talking to you.
yeah,
It's
great
interesting
talking
your
to you.
perspective on tech. Yeah.
Yeah. And thank you for just sharing with us about Defiance. And I'll be watching and reporting on it. Thank you
All
again.
right.
All right,
Thank you so
Sylvia.
much. Have a
All
great
right.
day.
Bye. You too.
Bye.